iWIN TV, see what others can't.
Welcome to this special edition of iWIN TV, where we'll take a look at the current state of cryptocurrencies and try to make sense of their meteoric rise over the past year.
In this special edition of iWIN TV, we will examine some of the facts about cryptocurrencies in an effort to start a lively dialogue and try to help you come to your own conclusions.
Past performance is not an indication of future performance. Please pause this video and read the disclaimer.
First, some facts. 1. As of July 28, 2017, there were approximately 830 cryptocurrencies in existence according to Standpoint Research. It's interesting to point out that in the entire world there are only about 180 standard currencies like the US dollar, British pound, European euro, Chinese yuan renminbi, and many others. 2. The current market capitalization of all 830 cryptocurrencies is about $75 billion. 3. The current US dollar volume of transactions involving cryptocurrencies is about $1.8 billion, up from $500,000 less than a month ago. 4. According to the International Monetary Fund and the World Bank, the GDP of the entire world in 2016 was about $75 trillion. 5. This really isn't a fact, but more of a theory taken from experience. In many cases, there is only room for one variant of a technology to exist. Oftentimes the market will quickly coalesce around one or two technologies. Think about VHS versus Beta, if you're old enough to remember, or how many operating systems have dominated their marketplaces for end users of computers. 2. Mac OS and Windows. Or for smartphones, 2. iOS and Android. Even more importantly, the technologies used to store data or communicate with networks must be identical for Apple-based computers and Windows-based computers. Or for Apple and Google Android phones to be able to interact and share data. How well would the internet work if there were incompatible standards for the transmission of information? So with all that being said, let's put together some arguments for why cryptocurrencies might or might not be overvalued, and outline some of the risks for the cryptocurrency landscape based on the facts and theory we just described.
Is there a shakeout coming? Unless a unifying technology is created that allows any cryptocurrency to be instantly converted into another, the number of cryptocurrencies must be greatly reduced from the current level of 830 to something less than the 180 standard world currencies. Our guess would be 1 to 3 cryptocurrencies will be standing when the shakeout is done, but a disruptive technology could increase that number greatly.
Is the current value of cryptocurrencies justified? People tend to look at the value of something new relative to something they know. Most people have never invested in a currency, but most people, at least at some level, understand the value of an equity position in a company or stock. Currencies by their nature are a totally different animal from stocks and derive their value from the goods and services that can be purchased with them. If we take a look at a chart of the daily US dollar value of Bitcoin transactions and compare it with the daily price of Bitcoin, you can see the transaction value and Bitcoin price track each other more or less pretty well. And since there are a limited number of Bitcoins available, the price of each Bitcoin must increase as the value of transactions increases over time. Why is this important? As we already mentioned, the value of a currency is determined by the goods and services that can be bought with it. If a car has a value of say $120,000, and 40 bitcoins are worth $120,000, and a person is willing to accept 40 bitcoins for their car, then the value of the bitcoins has been rationalized. No one would accept 40 bitcoins for the sale of their $120,000 car if in fact the bitcoins were only worth, say, $50,000. To us, based on this data, it appears at least the price of bitcoin is rational and not overvalued. If you think we're off base here, please start a dialogue by leaving a comment below.
So that begs the question. What is the potential for cryptocurrencies going forward? If we look at the numbers from the World Bank mentioned earlier, the world GDP is about $75 trillion. So the current potential worldwide market for cryptocurrencies is about $75 trillion. Let's make an assumption that at some point in the future cryptocurrencies capture 10% of the world GDP. This would be a very large success given the entire value of transactions over the past year have only captured about 0.17% of the world's GDP. A 10% share of the world GDP would place a transaction-based valuation at $7.5 trillion. So if the cryptocurrency markets continue to track their current market cap to transaction value, and they capture $7.5 trillion of the world's transactions, they have the potential to appreciate by 100 times their current levels. If, and this is a big if, Bitcoin becomes the only or dominant cryptocurrency, this would suggest the future price of Bitcoin could grow to $380,000 from its current level of $3,800.
Are cryptocurrencies safe? Many have suggested cryptocurrencies are the new gold. Gold is a safe haven asset. Under normal economic stress situations, cryptocurrencies might increase in value in response, but it is too early to tell and no one really knows. So far, cryptocurrencies appear to be in sync with the dollar value of the transactions taking place. In an extreme economic stress situation where access to a network becomes not possible, gold and silver coins and bars would be a better choice as a safe haven asset, because you will have access to them. No network means no access. When evaluating extreme economic situations, it is important to think about the unthinkable. So what can we make of all this?
First, let's look at the potential downside outside of extreme economic stress situations. Because the value of a currency is determined by the goods and services it will allow us to buy, the downside risk to any one of the over 830 cryptocurrencies currently out there is a shrinking transaction volume and value. In the worst case, the cryptocurrencies you are currently holding could go away in the future, and you could lose 100% of the money you have invested.
So far, Bitcoin is the dominant cryptocurrency, and if the market coalesces around it, the growth potential is very large. But if another cryptocurrency becomes favored, Bitcoin's value could drop to zero.
The current threat to Bitcoin is the long time it takes to perform a transaction, currently about 10 minutes. If this problem can be solved, either via an algorithmic or code change, or just the application of brute force compute power, there is a high likelihood Bitcoin will be the one left standing at the end.
Now let's look at the potential upside. If you are already invested in Bitcoin, Ether, Litecoin, Ripple, or one of the other 830 variants, and you're lucky enough to have picked one of the few cryptocurrencies that will survive the shakeout, you have the potential to make 100 times your money or more. Our conclusion: the current situation with any one of the 830 cryptocurrencies is risky, with large downside potential and somewhat limited upside potential. If you really want to jump on the cryptocurrency train at this point, it would be better to invest very small amounts, and keep a large portion of your money invested elsewhere. This way, if the significant downside happens, and the opportunity becomes better defined, you'll be able to jump in and have the potential to make good returns, with less risk later.
Please comment below if you feel differently, or have other information we have missed here. This video is meant to start a dialogue and debate, and we hope you've enjoyed watching today. Thank you for watching. Please subscribe to get better results from your investments.
iWIN TV, see what others can't.